Welcome everyone for joining us this morning for the Maine Society of CPAs Tax and Legislative Update. We're really excited to have a great group of panelists as well as participants. A few housekeeping items. We would request that those of you who are joining, and most of you have, if you could turn off your video and mute yourself for the first part of the program so that our panelists are those that are appearing on the screen. We hope to have probably the last third of the program be an opportunity for the panelists and those of you who are attending to have an exchange. I think the group is small enough to be able to sort of raise your hand and make this a little bit more interactive. However, if that doesn't seem to work, we'll resort to the chat box, which you can use anyway, but I think most people would prefer sort of the conversational exchange. We are scheduled to wrap up at 9:30. We are going to stick to that time schedule as best we can, being respectful of everyone's time. At this point, I would like to turn it over, and I should have said, for those of you who don't know me, an oversight on my part, I apologize. My name is Trish Brigham, and I'm the Executive Director of the Maine Society of CPAs. So again, welcome for being here. And Senator Cathy Breen, thank you very much for joining us. I believe we now have all of our panelists in place. And at this point, I'm going to turn it over to John Block and Elizabeth Frazier from Pierce Atwood.
Thank you, Trish. Elizabeth and I are going to be the co-moderators for this presentation this morning. We're going to start with introductions. I'll briefly introduce myself. I'll turn it to Elizabeth, and I'd ask each of our all-star cast here to introduce themselves with a little bit about your background and how you got to where you are and what you do now. So I'm a partner at Pierce Atwood in Portland. I specialize in Maine tax law. I also practice some in New Hampshire and Massachusetts. So my practice focuses on state income tax, state sales tax, local property tax, economic development incentives like Better and Betty. I litigate tax disputes, I provide clients with tax advice and planning, and I also do legislative work in the Maine tax arena. Getting some feedback from somebody who might not be muted. Okay, so I've also been representing the Maine Society of Certified Public Accountants on legislative matters in Augusta for over 16 years. And I'll turn it to Elizabeth to introduce herself.
Good morning, everyone. Thanks for being with us this morning. My name is Elizabeth Frazier. I am an associate at Pierce Atwood. I do work with John for the society, but I also work in government relations generally and have a pretty broad portfolio of issues that I do work on, ranging from tax policy to land use, economic development, climate action, insurance, agriculture, and healthcare, a whole range of matters. It's my pleasure to coordinate with John on the legislative matters for the Maine Society of CPAs. So thank you all for being here today. In no particular order, I'm going to next hand it over to our state economist, Amanda Rector, to introduce herself.
Good morning. I'm Amanda Rector. I'm the Maine State Economist. I work out of the Department of Administrative and Financial Services. I've been with the state since 2004. I've been state economist since 2011, almost a decade now. I did my undergraduate in econ down in Massachusetts at Wellesley, and then I have a master's in public policy and management from the Muskie School at USM. I sit on the Revenue Forecasting Committee for the state. I provide staff support to the state's Consensus Economic Forecasting Commission, in addition to sitting on some various other panels, including the advisory board for the New England Public Policy Center at the Boston Fed and the Muskie School Board of Visitors. I also serve as the governor's liaison to the U.S. Census Bureau and do a lot of work with various census programs and activities. I imagine I am probably here today to answer questions and talk a little bit about the state's economy, the outlook from the Consensus Economic Forecasting Commission, and how that fits into the larger forecast and budget process.
Thank you, Amanda. I will just, again, in no particular order, I'm going to turn it over to Mike Allen to introduce himself.
Good morning. So my name is Mike Allen. I am the Associate Commissioner for Tax Policy, which is an office within the Department of Administrative and Financial Services. The Office of Tax Policy provides legal and economic analysis to the Commissioner and the Governor and the development of tax proposals that the Governor may include in legislation during this legislative session. We also work with the Taxation Committee on evaluating bills that come before the committee. I've been doing that for almost 10 years now. I've been with the state for 24 years, working on tax proposals, but also forecasting revenues, baseline revenue forecasts, and also estimating the impact of proposed legislation on state revenues. Prior to coming to the state, I worked for 6 years with the U.S. Treasury's Office of Tax Analysis, pretty much doing the same thing for the federal government, forecasting baseline revenues and estimating the impact of either proposals that the president was making to Congress or proposals that were coming up through Congress. I have a bachelor's degree in economics from the University of Vermont and a PhD in economics from Boston College.
Great, Mike, thanks so much. I'll turn it over now to Senator Cathy Breen. Senator Breen, if you don't mind introducing yourself.
Good morning, everybody. Thank you for having me. My name is Cathy Breen. I represent 6.5 communities in Cumberland County. I'm serving my fourth and final term in the legislature because we have term limits. And this is my third term rather, serving on the Appropriations Committee. My second term serving as Senate Chair of the Appropriations Committee. My committee relies a lot on the work of the professional nonpartisan staff like Dr. Allen, like Ms. Rector, and other folks from the nonpartisan, deeply skilled, experienced, and educated folks who work in policy arenas, and rely on them to present accurate, unfiltered data that informs the work of my committee and the entire legislature. Thank you for having me.
Thank you for being with us. Representative Stetkis, do you want to introduce yourself?
Good morning, and thank you for having me. I'm Joel Stetkis. I represent District 105, which is 6 towns on the southern frontier of the Moosehead Lakes region. I'm currently serving as the House Republican Assistant Leader. By way of background, I've lived in the town of Canaan most of my life, for over 40 years. I'm an Air Force veteran. I've spent a lifetime, my lifetime in the private sector in rural Maine, as a residential contractor, business owner, and employer. I was first elected in 2014, and I am also serving in my 4th and final term. I first served on the LCRED committee, which was a labor committee, for 4 years, and then last session, I served as the lead Republican on the newly formed IDEA committee. And I'm here to listen and learn from the professionals in your industry, and look forward to it.
Great.
Thank you for being with us. And finally, I believe if TJ Herlihy would introduce himself.
Yeah, good morning. My name is TJ Herlihy. I'm a Vice President, Regional Sales Manager for Bangor Savings Bank, specifically our Bangor Payroll Division. So Bangor Payroll has just shy of 5,000 clients. So we give a pretty large swath of insight into what a lot of clients in Maine are looking for. By way of how I got here, I was recruited out of middle school. No, I'm just kidding. I started as a teller at Bangor Savings Bank many moons ago, and have spent time in retail banking, business banking, and now the payroll division. So that experience kind of leads to being able to offer some insights into what our probably mutual clients are seeing. as well as a lot of these programs that we're going to be discussing impact both the business banking side and uniquely the payroll side. So that is my intro.
Great. Thank you, TJ.
So I will take it back, Elizabeth, for the next segment. So the first area that we wanted to explore this morning is PPP conformity. And normally when we're talking about conformity in a normal year, it's often a matter of taxpayer convenience, administrative convenience, not having to have two sets of books, making it simple to file. This year, conformity brings with it, especially with the PPP loan forgiveness, huge policy and economic impact one way or the other on both the state and on Maine business and taxpayers. So stakes are much higher with conformity this year. So I'd like to first start out and ask Mike Allen if he could just give us an overview on what the current status of conformity, non-conformity is relative to PPP. And then I thought I would go then to Senator Breen and Representative Stetkis to talk about the policy issues and where the legislature might be heading in that area. So Mike, would you mind doing that for us?
Sure. So as everybody knows, Paycheck Protection Program was in the CARES Act, and we obviously looked at that extensively over the summer, had some discussions with folks on this call from the Maine Society of CPAs, get their take on it. And we certainly, the governor was prepared to present in her supplemental budget that was just released last week, a proposal on how to deal with the Paycheck Protection Program that was in the CARES Act. Of course, then the Consolidated Appropriations Act was passed at the end of December, and that's when Congress made clear that not only was the forgiven debt going to be exempt at the federal level, but the taxpayer would also be able to take the expenses that were related to that forgiven debt. That caused us to obviously fall back and rethink everything. And again, we had a call with some folks that we appreciate from the Maine Society of CPAs to help us think this through. What I can tell you is the governor will be providing a change package to her supplemental budget within the next week or so. And there should be a public announcement either later this week or early next week that will say the state will allow, obviously, the deductions for PPP related expenses, but will ask taxpayers to add back up to that level of expenses the amount of forgiven debt that they either anticipate or have actually received for the 2020 tax year. That will essentially maintain a revenue neutral impact on the state's budget. I can also tell you that Maine Revenue Services plans to waive interest and penalties for those taxpayers that are burdened by that approach and feel like they need some extra time in order to make any additional payments to the state.
Okay.
And like, as I said, that should be public within either the end of this week or early next week.
Well, that's hot off the press, and appreciate that heads up, Mike. So I'd like to get first Senator Breen's perspective on perhaps she can tell us what how her caucus feels about this as a policy issue. So Senator Breen.
Thank you. I just had a domestic interruption, so I have to apologize for that. I am just learning now that there is a change package coming. from the administration. So that is new information for me. So I need to see what's in it, first of all, and then we will have our public hearings, and I will also, I don't pretend to be a tax policy expert in any way, shape, or form. So I will be checking in with my colleagues on the tax committee for sure. Checking in with leadership as well, as I'm sure Representative Stetkis will. And I need to really figure out, before I kind of develop any position, what the proposed changes are going to do for revenue in the upcoming biennium. So the supplemental, as you know, is tweaking things for the rest of this fiscal year. I certainly understand that these changes need to be retroactive to 2020 tax year. So I have a lot to absorb before I develop any kind of policy position. So I'm looking forward to learning what you folks think. Thank you.
Great. Representative Stetkis, can you give us any opinion you might have about full conformity or sort of the partial conformity that Dr. Allen just described to us from your perspective?
Well, the good senator nailed it. We're once again, we're learning something new. This is definitely breaking news to us as well. So I think it would make sense as policymakers to get more information and actually have time to have conversations and actually look at the look at the words and look at the numbers that are proposed before we actually come to any conclusion.
Okay, good. I'd like to just ask maybe Amanda Rector whether, given the state of Maine businesses, particularly small businesses that are suffering, if they have to end up paying income tax on the PPP forgiveness or have some of those deductions disallowed, either way, whether she has any opinion on the impact on those businesses that are already suffering.
Yeah, it's been incredibly challenging over this past year, and I keep feeling like, gosh, we're this far into it. I feel like I should know more about exactly how things are going, and everything is still so uncertain and so quickly changing that it still is hard to pin down anything. I think one of the things that's really important to try to keep in mind is that so much of this is a balancing act between trying to make sure that businesses and individuals are supported so that they're able to continue on and get through this, and at the same time also making sure that state and local governments are able to continue to provide the services that are needed to help support the individuals and businesses. So it is absolutely not easy, and I am glad that I am more in the position of providing data and analysis than making the really, really tough decisions that other people have to make.
Great, thank you. TJ Herlihy, do you have any, from your unique perspective as a bank and Bangor payroll serving thousands of Maine businesses, do you have any perspective on the impact of conformity or non-conformity to PPP on your clients?
No, I would say I'm in the same boat as a lot of the other folks on the call. I think we're gonna have to dive into the numbers. Bankers are inherently very much similar to CPAs, where we like to see numbers and fully understand them and digest them first. So I would say I'm in the same boat as the rest of the group.
Okay, great. Well, we've already had breaking news in the first 20 minutes of this, so It's been exciting. So I'm going to shift gears a little bit and talk about remote workers and telecommuting. So COVID has obviously upended many people's work habits, with so many more people telecommuting from their homes, not going to the office. Massachusetts came out earlier in the year with temporary regulation that actually makes non-residents who are telecommuting to Massachusetts from other states subject to Massachusetts income tax, while those residents are actually working in their home state, those non-residents of Massachusetts. The Mass rule has constitutional issues. New Hampshire is suing Massachusetts in the US Supreme Court over this. I heard yesterday that Connecticut has joined that suit or filed an amicus brief supporting New Hampshire's position. So Maine has not gone down this road, but is allowing some Maine income tax relief to any Maine residents who are telecommuting to Massachusetts and being taxed by Massachusetts while they're working in Maine. So I'd like to ask first, Mike Allen, if this telecommuting issue is anything that Maine should be concerned about or is concerned about from a tax policy perspective. Is Maine gaining revenue from people telecommuting or losing revenue, and how big of an impact does it have on Maine, if any? So Mike, do you have a perspective on that?
Well, if somebody can answer that question for me, I'd appreciate it. That's in some ways the $60 million question at the moment. We don't know. We really don't. We've read the newspapers and seen the stories and the anecdotes about people that have come to Maine to avoid COVID, being that Maine is a safe state that had very low rates of infection and so forth. But we just don't know to what extent that's happening, to what extent that's been fueling some of the sales tax revenue, income tax revenue that we're seeing. We in some ways are really interested to hear from tax practitioners to know what they're hearing from potential clients that may find themselves in Maine and realizing that they have a Maine tax obligation for the first time. Okay.
Well, we're going to try to make sure you do hear from practitioners at the end of this program a little bit. TJ Herlihy is from the payroll perspective. Has this been an issue at all for you, or the increased complexity related to telecommuting?
Yeah, no, I would say no. If anything, it's gone the opposite way because depending on what state some of our clients, and we pay taxes in every state for our clients. So depending on where they work versus where they live, each state's a little different on how they tax their wages. So telecommuting has actually kept them in one spot, which has made it a little easier for us in some regard in terms of taxation of that employee's wages.
Okay. I'll throw this out to Senator Breen, Representative Stetkis. I don't know if they've had any exposure into this particular issue, but do you have anything you'd like to ask or add to this part of the discussion?
I would say that what I have heard is largely anecdotal, and I have yet to really wrap my arms around what it's going to mean for Maine taxpayers, and I'm trying to phrase it in a way that is a little bit broad, but I think everybody knows that one of Maine's challenges is workforce and talent recruitment, and it's in the governor's 10-year economic plan. It's in the Economic Recovery Committee work. So on the one hand, I want to roll out the red carpet for folks who are going to bring talent and expertise to the Maine economy because we need it in all corners. On the other hand, I don't want Maine taxpayers being taken advantage of if we're the ones paying for a lot of infrastructure, especially transportation infrastructure. The gas tax doesn't cover our transportation infrastructure by any means, and we rely on general obligation bonds to fund a lot of our transportation infrastructure. So I'm trying to figure out where that balance is. And I don't really have any hard data yet to work with to try to strike that balance, but that's what goes on in my brain and my priorities as we wrestle with these things.
Great. Representative Stetkis, any thoughts?
Very interesting situation. Especially you get more into the rural parts of Maine. Normally about Labor Day, we see the Connecticut, New York, Rhode Island, Massachusetts plates vanish. And we haven't seen that. In fact, in some areas of the state, I was very surprised to see that actually the majority of license plates on vehicles driving down the road were not from Maine. I'd be really interested to hear, from you folks in your profession, how exactly would we make that determination that those people that are here in Maine that are still working their jobs out of state, how would you identify those people? And then what could we possibly do about it at that point in time to make sure that the laws are followed?
Well, we'll definitely explore that when we have the Q&A, but I mean, Maine's whole income tax system is voluntary compliance, and that you would expect the taxpayers and their accountants to, have that conversation and report. And this also gets to the 183-day rule, which is another topic I'm going to get into, which is also voluntary compliance. So before we get to that, Elizabeth, you're going to tackle the next topic.
Yeah, and in the interest of keeping us on time for a good hearty Q&A at the end, I'll be quick with this one because Mike Allen did touch on it, or I heard him touch on it, with regard to filing deadlines and possible penalty waivers or penalty relief. Many of you, I'm sure, know that last year Maine took a fairly flexible stance with respect to penalties and filing deadlines, realizing that so much was in flux last tax season. And of course, looks like we'll have, in many ways, much the same thing this tax season. So I was curious if Mike or anyone else on the call this morning knew anything about sort of filing deadline waivers, extensions, penalties, that kind of thing being pushed off in a similar manner as last year.
So there's nothing beyond what I mentioned relating to PPP at the moment that Maine Revenue Services is considering as far as filing extensions like we did last year. Last year, right, we followed the federal law on April final payments and April and June estimated payments, moving that all out to July 15th. And we also provided an extension for corporate filers, moving the extension date from October 15th to November 15th this fall. So I think we'll certainly be open to seeing what the federal government does again, if anything, and take that into consideration. But the state was in somewhat of a unique position last spring to follow the federal extensions. The governor and the legislature left us in pretty good financial shape when they left in mid-March. And that allowed us to be able to financially afford allowing people to defer their payments to July 15th. Whether we're in the same position this year is, we'll see. But it was a unique situation, to say the least.
But the odd thing is the pandemic seems to be actually much worse now than it was then in the state of Maine. And so the strain on accounting firms and things is going to, where they're all working remotely, is going to be probably worse than it was last spring.
Yep, and I'm sure, again, I'm sure the governor and the legislature will take into consideration those issues, but
Sure.
the state does have a balanced budget requirement.
That's a good reminder.
Sure. Go ahead, Elizabeth. I don't know if you want to get anybody else's perspective on that.
I think Mike sort of took us in the right direction there. It sounds like there's sort of wait and see with respect to federal action, but also taking into consideration things here in Maine. So in the interest of time, I'll turn it back to you, John.
Okay, so I mentioned the 183-day rule for statutory residents earlier, and this is probably a phone call I get several times a week, not every day, but maybe every other day. So people have been, for example, Florida residents for the last 20 years. They have a vacation home in Maine. They came to Maine in March, say. They did not return to Florida because they felt it was unsafe to travel back to Florida, either on a plane or in their car, or there were, quarantines in effect in the different states between Maine and Florida, and they couldn't travel to Florida. So they rode out the pandemic in Maine. They're still here. And they asked me, well, do they have to file as a Maine resident this year? My answer is, since they were here for more than 183 days and they had a residence here for the entire year, the answer is yes, they do. And obviously they're using state services. A lot of them are incredulous with that answer because, from their point of view, they had no choice and they didn't intend to be a Maine resident, but they just couldn't physically go back to Florida. Some states have provided relief in these situations. Basically, every state has the same 183-day rule. And I just would like to ask the panel if this is anything that Maine has been considering providing relief on or not. So I'd start with Mike and then move to Senator Breen, Representative Stetkis. Mike?
Yep. So as you mentioned earlier, the governor's supplemental budget does have language to allow Maine residents who had previously been commuting out of state, who have now been working remotely from Maine, to take the credit for taxes paid to other jurisdictions if that state they were commuting to is asserting jurisdiction and continuing to tax them. The governor felt like the employers, those out-of-state employers, those Maine resident employees did exactly what she and other governors asked them to do, right? Shelter in place, work remotely, and she didn't feel like the Maine residents should be double taxed, and that's the proposal that's before the legislature. As far as remote workers go, 183 days, part-time residents, all of those rules, from the governor's point of view, are still in effect. She's not offering any legislation on that issue. I believe there's at least one or two bills that may be coming to the legislature dealing with the 183 days. And, I'm sure the administration will consider them at that time, but
Okay.
at the moment, that's where the governor is.
Thanks, Mike. Senator Breen, do you have any thoughts on this 183-day issue?
I don't know the scope of it, so I'd be interested to see if your group has a ballpark scope of it. And I mean, my initial thought is if those folks are benefiting from the good work of the Maine CDC and the good work of the hospitals and healthcare system and everything that this state public and private sector has done to keep people safe, I would think and that they benefited from that, I would think that they would welcome the opportunity to contribute to their well-being as well as everybody else's. But I haven't really dug into the numbers, so I don't want to, I'm not committing to anything. I've learned
Sure.
to put no stakes in the ground upon receipt of a budget proposal before public hearings, before we dig into it. So those are my initial thoughts.
Okay. Representative Stetkis, you were alluding to all the Massachusetts and New York plates that you're seeing. Any thoughts on this topic?
Very interesting topic. Yeah, definitely have to learn more from the professionals in your industry and others as far as the options and those sorts of things. Like I had said in the beginning, one of the biggest things for me here today is to listen to you and learn from you so that we can take that information and hopefully act properly.
Okay. Yeah, and I'm going to make sure that we have at least 15 to 20 minutes to do that. So if we don't get through the whole agenda, that's fine. Because I really think that's going to be valuable for everybody here to have that discourse. TJ Herlihy, I'd like you to talk for a few minutes about the payroll implications of all of this, especially the PPP loans,
Sure.
The payroll tax deferral program, the employee retention credit, et cetera. If you wouldn't mind.
Sure. Yeah, no, absolutely. So as we all know, in terms of the Paycheck Protection Program, that's been opened up for a second draw. Even if your first loan has not been filed for forgiveness, you can still apply for your second draw. We as an institution opened up applications yesterday. If a financial institution hasn't done that already, I think we are comfortable enough as a collective of financial institutions to open those back up. Unfortunately, or fortunately, I should say, there's more clarification this time because we've been through it. So there's we're able to provide clients with what we need to get applications through. A lot of institutions have invested quite a bit of capital into streamlining the application process, moving away from paper forms and more of electronic procedures, just to try to make it easier for clients to get the money that they need. So it's also opened up what expenses are qualified under PPP. So again, 60% still needs to be used or must account, payroll costs must account for those. But it's opened up what the rest can be used for and still be considered forgivable. So in addition to that, accommodation, food service industries being able to now take 3.5 times the average monthly cost is huge, because again, those are the most impacted clients that we have, and that I'm sure, Maine as a state, that's a majority of our workforce. So that's encouraging to see. There was more clarification on what a true seasonal employer is. So that's helped us on our side and advise our clients and let them know, what does that word mean? You talk to a Maine business, everyone in Maine is a seasonal business. From a tax point of view, that's a little different. What a true seasonal business is. You ask them if they have a seasonal code and they have no idea what that is. So there's been some more clarification on that. So that's been good. So I would say with the PPP, this second go round, I think will be a lot smoother. From a financial institution, I think we're expecting about 50% of what we received the first time in terms of number of applicants, but 70% of the dollars. So that's some of our estimates. We could be off, but that's kind of where we're landing in regards to the PPP process. We think a lot of that is because of the simplified forgiveness applications, which has been huge. The next piece, though, that ties into this is the employee retention credit, right? So there's been a revision of this and an extension of this. So there's two parts to this. I wish I had more answers in some of these areas. I think we all do, but there's a couple of key points that I want to point out. So what really the main piece of this is for Section 206 is it allows participants that took a PPP to now get the employee retention credit. So that's huge. The piece of that, though, is that the caveat is that you cannot use the same wages that you used to justify your PPP loan for your employee retention credit. So what we were seeing and what we're seeing with our clients is that when this first came out, there was no need to worry about that piece of it because they weren't eligible for the employee retention credit. So they included everything that they could. They would get the maximum loan and go from there. Now that it's been extended retroactive back, we're seeing a lot more questions on should that have actually gone toward the employee retention credit or should it have gone towards the PPP? One of the questions that we're getting a lot from our clients that's not been answered in any of the research that we've done is what happens if you've already filed for forgiveness, right? So that's one question. The second piece is, which would seem like a logical answer, but what do you do if you want to receive the employee retention credit? You maybe say you have enough payroll costs over the time that this was ongoing for your qualified quarters, that you can justify both an employee retention credit and the PPP, and you can, in essence, double dip. You would assume it would just be a 941 revision or 941X. But the Act doesn't explicitly state that. So that's the avenue that we are most likely going down, is just doing corrections for Q2, Q3, 941s. But again, it's hard when clients ask you, what do you do? And there's no guidance, but it's the world we all live in right now. So the second piece of this is Section 207, which really opens it up into 2021, right? So that moves the credit from 50% of wages up to 70% of wages. And probably one of the biggest piece of this is that it takes it from $10,000 maximum per employee for the entire life, or all quarters, to $10,000 per quarter. That really opens up what this credit could potentially be for a business. It also loosens the employee restrictions on how many employees you're allowed to have before you can include all wages in your credit versus just the wages that you're paying out for someone not to work. So those are some of the big areas. Again, I could probably spend the entire hour on the employee retention credit. So if there's more questions, I'm certainly willing to answer those. And then the final piece that I want to cover real quick is the Social Security tax deferral. So that was, again, when we call it the Act, when that came through at the end of December, that basically what that did is it pushed out the repayment schedule. Instead of it being in the first 4 months, it opened it up for the entire year. I will tell you, we pay over 90,000 Mainers and a few others out of state, roughly 5,000 clients. We had one client who had one employee take advantage of the employee tax deferral. To put that in perspective, also on top of that, most of the time when these programs come out, our clients reach out to us because they want to be educated on these, reach out to us or their CPA, sometimes both. There was very little reach out to us on the deferral program. I think it was because employers and our clients understood it as simply that you're just kicking the can down the road, and it was not something that they wanted to take advantage of. So there was not much adoption on that. There was not much questions on that. So I would say one thing that's not listed is that the Act did is it did push out or extend the work opportunity tax credit. So depending, again, a vast majority of Maine is considered in that work opportunity tax credit zone. And there's quite a few employees in Maine or potential employees that would fit that bill. So that has been extended out, which was a good thing to see because it was scheduled to end at the end of 2020. So I would say, in as fast as I could, that was the main points of the Act and how they apply to the payroll area.
Great, thanks, TJ. So we're going to go right to the Q&A because what we've heard for the last 45 minutes is how much the policymakers really want to hear from the CPAs on what they're seeing on the ground and what is happening with their clients and what questions they have. So everybody can feel free to unmute themselves turn on your video. Elizabeth, why don't you moderate this part?
Or
You wouldn't mind?
great.
Okay.
So I think we could do this one of three ways. Either feel free to put your question in the chat, as Trish mentioned in the beginning, or you can just physically raise your hand, or I think if you use the raise hand feature, one of us will also see you. Or you can just start talking. That also works. So if anyone has questions, thoughts, comments for any of our panelists, please jump right in.
I will just begin by saying that the majority of the questions I received from people prior to this meeting related to the non-resident, which you have addressed, the 183 days, and the deductibility of the PPP loan. And Mike, I think your comments were right on, as well as both Senator Breen and Representative Stetkis. I was on a call last week with a representative from multi-state taxation with my counterparts all around the country. And they actually had identified Maine as one of about 10 states that they thought would be facing significant state budget challenges. So, and also I think I will echo Amanda, you said it, it's all about balance right now. So just wanted to share those perspectives that that I'm hearing nationally, and also as well on the call that I was on, another call I was on that late last week. Rumor has it that there is not going to be an extension at this point on any of the federal tax filing deadlines. So that may change again, but wanted to share that as well. So now please raise your hands. I think we heard from Representative Stetkis and Senator Breen issues or looking for feedback from those of you who are practitioners. So please feel free to, even if you don't have a question, but you have some insights on some of the comments or topics that were raised, please feel free. That's why you're here, and we'd really appreciate hearing from you.
Daniel. Dan.
Hi, thanks for the opportunity. So on the 183-day issue and the dual residency, I appreciate Senator Breen's comment about people paying their fair share. That certainly is a fair approach to take. If I'm the taxpayer in that case, though, and I'm looking at a situation where I'm considered to be resident both in Maine and resident in, let's say, New York or whatever other state I come from, I'm looking at paying the amount of state tax that I otherwise would pay. Now, there is a provision under Maine law to take a dual residence reduction tax credit. It's kind of complicated, and it is contingent upon the other jurisdiction allowing a similar tax reduction. And I might propose that if you're going to stay with the 183-day rule in the COVID situation, maybe looking at ways to make that dual residence reduction tax credit simpler, or taking away that contingency about the other jurisdiction allowing it. It might foster more compliance from people if they're not paying double the amount of state tax, but they're paying somewhere between 1 and 2 times.
That's a great question. Good point. Thank you, Dan, for raising that. While we wait for someone else to jump in,
Could I just interject on that a little bit?
Yeah, absolutely. Please do.
And it's a question more than anything. So with the idea of, and we know it happens all the time, a person moving from one state to another, they work in Maine, say, for 4 months, and then they move to the other state, and then they work there the remainder of the year. I would imagine in that situation, they're not paying tax. They're paying a portion of the taxes for the time they were here in Maine, and then in the other state. Could sort of that type of principle fall into, this strange situation we find ourselves in?
I don't know, John, do you want to tackle that one? I would say that you're talking about a part year resident situation as opposed to specifically in this case, the other state would say, no, you're not a part year resident in New York. You're a full year resident. You haven't changed your domicile. So you'd have to have the other state sort of buying in to that approach. And I don't think they're going to do that.
Right. If you intend to return to the other state, based on all of your facts of your life, they're going to consider you still a resident of that state for the whole year. The part year resident comes in when you're actually moving and changing your intent from one state to another. So I pack my bags, I get rid of my life in Maine, and I decide to move to New York. For the first few months before I did that, I'd be a part year Maine resident, and then I'd be a part year New York resident. But if you don't do that, and you spend a few months here and a few months there, this 183-day rule is a black and white rule that just says if you have a residence in the state for the whole year and you spend more than 183 days, you're a statutory resident for the whole year. Doesn't matter what your intent is. And that can create this dual residency problem where New York would consider you a resident of New York because you intended to return, and Maine considers you a resident of Maine because you exceeded 183 days. And this dual resident credit, I totally agree with Dan, it's extremely complicated. It doesn't always provide that much relief, and people end up paying double. I think, and don't quote me on this, but I think New York is one of the states that doesn't have that reciprocal credit. So I think you end up paying double if it's a New York situation, but don't quote me on that.
Thank you.
We've got a question here in the chat. Hang on 1 second. If Maine retains the taxability of PPP forgiveness, is forgiveness taxable in 2021 if the SBA forgives the loan in 2021, or is it taxable in 2020? No, it's a good question. I'm going to direct that one to Mike, but if anyone else has an answer, they could jump in.
Well, again, I'm an economist, so I'm not a CPA. But I think the approach that we're taking and that we'll be presenting to the legislature is if you're taking the deductions, the PPP related deductions in the 2020 tax year, and you anticipate that the loan will be forgiven, we're going to ask you to add back to your income up to the amount of those expenses in 2020.
Yeah, okay. That makes sense based on what I've heard. One question that I have, well, if and it may spur other questions, this may be particularly to the policymakers. Certainly we've heard, in the past, and I would assume continuing going forward, that a big factor in really any policymaking choices may or may not be, potential future additional federal relief. And of course, we know that in the most recent Consolidated Appropriations Act that someone mentioned earlier, while it did a lot of things for individuals and businesses, it did not provide additional state relief dollars. And so I was just curious if my sense is that you're all in kind of a bit of a wait and see, and that will impact potentially decisions made this session. But perhaps Senator Breen, you could just share any thoughts you might have about that in the position that you're in.
You're right, Elizabeth. We are in a wait and see, and we were in a wait and see most of 2020 as well. We got together almost monthly, as we usually do, in or out of session. Appropriations normally meets once a month just to sort of track revenues and financial orders and things like that. And I think our nonpartisan staff was built some assumptions of additional federal aid after the CARES Act into their forecasts, which ultimately sort of materialized at the end of the year. But as you said, there's been no specific relief for states and other units of government that have seen reduced revenues as a result of the pandemic. So I still would like to see that. Maine was in a very enviable position in March when we were forced by the pandemic to adjourn. We did think when we adjourned in March that we would be back for a special session, which did not transpire, did not actually take place. But leaving behind $193 million surplus in the general fund to give the administration and the next legislature some wiggle room was very, very prudent. And you're seeing that in the way that we're going to close this fiscal year on balance. And that's without touching the rainy day fund at all, which is at a historic high at $258 million. So, you know, Maine is in better shape than a lot of other states because we've made some really smart decisions, both prior legislatures, prior administrations, this administration, this current or last legislature. But without federal assistance to fill in those revenue holes, we're really not able to address some very, very important systemic problems in Maine. The governor's proposed budget is kind of a hold the line, kind of a status quo budget, which is understandable given the circumstances. But, you know, we have a concurrent epidemic of opioid deaths that are happening. More people have died from opioid overdoses than from COVID-19 in Maine. And the numbers went up in 2020, and they went up in 2019. And there's all sorts of mental health implications of this pandemic. There's huge educational implications for the pandemic. I've heard from many, many school districts who would really like to be able to do more robust summer learning for the kids they know are not being able to fully engage in remote learning or hybrid learning. So we're not able to make any of those really, really important investments in Maine people without any further additional federal help, without any federal help at all for the state or local governments. So I'm optimistic, but I don't have an inside track on any information. I mean, we advocate for it regularly with our federal delegation, not only from the executive branch, but from the legislative branch. So we will continue to do that, but it remains a mystery to me.
Well, thank you. That was a very helpful overview. There's one question from Mike Santo in the chat, and I'd like to sneak it in maybe before we wrap up. His question was about conformity and when we might expect to see it passed, which I know is, again, talk about a $64 million question. I think his point was that it passed last year just after March 15th, which made it tough, you know, for a lot of folks to sort of comply with the law, and just if there was any sense of whether or not this year we might see it before or after on the timing of conformity with the filing deadline.
Well, we do plan to take up the supplemental budget proposal before the biennial budget proposal. So
okay.
We hope to dispense with that expeditiously, but you know, I can't give you a firm date.
That's still helpful. Thank you. And with that, I'll maybe turn it back over to John or Trish to close us out.
Yeah, I just want to say thank you very much to all of our panelists and our participants. I think this was a great, from my perspective anyway, a great start to a dialogue. And I chose the word start very specifically because there's a lot that's still going on. And I guess I would offer and suggest that if the legislature or any other government officials need information or connection, you've got us. So please feel free to reach out. I would be happy to serve as a facilitator and the connector between our terrific panelists and our terrific participants and CPAs in the state of Maine. So please feel free to do that. Thank you again, everyone, for your time. If there are any questions that come up from either the panelists or the participants as we close down, please feel free to reach out to me and I will make sure that they get to the correct person. Thank you again for your time. And if there are no other comments, I will let you all get on with your day.
Thank you for having us.
Thank you.
Thank you. Thank
Thank
you to
you.
everyone for being with us.
Thank you very
Thanks.
much.